welcome back to Roxham TV and also welcome back to Gem Crypto. Whichever platform you're watching on, I hope you guys are having a fantastic day. As for the market, we are finally ending this ridiculous shutdown. It's the longest shutdown in the entire US history. So this is actually a really good news for the entire market, not only for Bitcoin. But what we have seen yesterday was that Bitcoin was kind of having a little tantrum, so it's a little bit volatile. We dropped to around like 100K. Right now we are recovering, so we're sitting at 103. So of course, as I always start my show with a little bit of TA where Bitcoin is heading to. So TA wise, looks like well, maybe the bottom is near finally because we have the death cross. I know it sounds really ridiculous because like death cross, it sounds so scary, but like usually when that happens, that means the bottom is actually very near. So it's very interesting. So without further ado, let's actually dive into the chart. So what I have here is the daily chart of Bitcoin. Let me go ahead and close the trend line first. So on the daily chart, we are okay at the shorter time frame. One thing Bitcoin has been building up is just like general downtrend overall. So if we get rejected at this key level, so 104 and then 102 again, that is a bearish sign. So what I want to see is Bitcoin actually close above that on the daily chart, which I haven't seen. So that is not a particularly a good thing. But one thing I noticed, like very, very interestingly, is the death cross is almost happening. Like I know death cross and golden cross is actually, it works like the opposite. When we have the death cross, that means the bottom is already in. Very interesting. So the death cross, how do we count this? So this is the 200-day moving average. That's the red line below at the bottom. And then on the top, so the blue line, we have the 50-day moving average. So what this means, why we call it a golden cross or a death cross, is that when we have the 200-day moving average being the red line, going above the 50-day moving average, that is classified as a death cross, so-called a death cross. And what we're seeing here is that they are getting so close and so close to one another. 200-day moving average sitting at 110, while the 50-day moving average is $111,000. So it's just like a little bit of difference. So the gap is closing very soon. When that happens, that is the death cross. But okay, it sounds very scary. But like if we actually zoom out, when the 200 days are being the red line going above the blue line, it usually is the bottom because that's what we saw back in, so here, April 2025. So this year, the 200-day was going over, so going above the 50-day. But when that happened, if we zoom closer, we actually, the bottom is very near. So here we have, so on 6th of April 2024, when the death cross happened, it was sitting at 76.9K for Bitcoin. And then we found the bottom the next day, which was at $74,500. So usually when that happens, that means the local bottom is near. That's called the death cross. I don't know why. I think you should like, it's a bullish sign in my book. So this is just like one incident. If we zoom out and look at, well, look at this as perhaps August 2024. So on 2nd of, well, actually here. So on 9th of August 2024, we have the 200-day going over the 50-day moving average. And when that happened, look at this, like the bottom has already been located. So it was like $49,000. So the local bottom has already happened. This is like another, okay, maybe second time is a charm, right? But if we actually maybe zoom out again, How about that? So if we zoom out again, all the way back to September 2023, the same thing happened. So here we have the so-called death cross taking place in September 2023. And when we have the death cross, we've actually seen the bottom forming. So I have no idea why is it called a death cross when it is a bullish sign. So at least I am seeing some good sign from the daily chart because, you know, I've been doing TA every single day. And from here, when Bitcoin is forming this downtrend, I was bearish since 126K. And right now, since the 200-day is getting so close, it actually looks like to me the bottom might be near. In other words, like, okay, I'm not saying that in the coming hours, we're gonna head to previous all-time high. That's not what I'm saying here. But what I'm trying to say is that, okay, maybe in the coming day or two, like within this week, we might actually drop a little bit more. When we drop a little bit more, what will happen is that the 200-day will finally catch up to the 50-day or maybe perhaps go above that. So when that happens, that's actually the bottom. So that's the local bottom in. So this is what I see on the daily chart. And it kind of aligned with the thesis I keep throwing around. So I do think the best time is ahead of us. So we're going to see a new all-time high in November or December because there are three groups of people in the Bitcoin market right now. The first group is that the 126K is ready to the all-time high. The second group is that all-time high is going to happen in November, in December, because like if we apply the cycle top to cycle top for every roughly 4 years, we will get the cycle top, so the new all-time high in roughly November or December. If we're lucky, maybe in December. Like if we don't see a new all-time high in December, then probably this is the cycle top already. And then the third group of people is saying that since Bitcoin's so big, it is getting into a macro asset. So there's a lot of macro tailwind. We know the Fed's going to cut rate. We know QT is going to come to an end. And we know government is, well, they have ended the shutdown because Donald Trump has signed the bill last night. So there's a lot of bullishness, like a lot of like bullish tailwind to move Bitcoin higher. But like, I'm just telling you what I see from the chart. The death cross is, it sounds, there's a lot of misconception out there because like I was actually doing some live stream as well, but like some people tend to think the death cross was a bad thing, but like it's actually a good sign that the local bottom is in. So here on the daily chart, let's also hop onto the weekly because like the weekly, it kind of solidified my thesis that we are near the end of bull run. We are near the end of bull market. And looks like 2026 is going to be a bear market. Applying the 4-year halving cycle of Bitcoin, applying the midterm cycle, because we know 2026 is a midterm election year. So usually when that happens, the entire year of Bitcoin's price is just like chopping around, correcting. So it's extremely boring and a little bit of pain as well. So using the weekly candle from the Bitcoin charts is also adding a little bit of weight of my thesis. Again, like all these analysts at the end of the day are just guessing. But like what I'm trying to do is to use numbers and data to back my claim. We are all like, we don't know what's going to happen, but I'm telling you what I see from the charts, and you guys can draw to the conclusion whether you think Bitcoin is big enough to become a macro asset and we're no longer going to see a bear market. But here, using a TA mentality, using a TA analysis, so if we pay attention to the 50-week, because just now we were looking at the 50-day, right? And right now, if we look at the blue line, 50-week moving average, we're actually hanging by a thread. So Bitcoin is battling to stay above the 50-week, which is 103K. So we are staying at, okay, it was actually went a little bit lower. So a little bit lower than the 50-week moving average. What I thought from last week was that we're going to get a confirmation whether the bear market has officially started yet. But what happened is that Bitcoin just like kicking the can down the road, because last week we didn't have the confirmation. Okay, we closed above the 50-week, but right now we are battling to stay above again. The reason why this is so important, because like this indicator has never failed us. If we get like 2 weekly candles closing below the 50-week, then that is the definition of bear market. And if I see that, I'm going to take massive profit. So I don't know the approach for you guys, but that's what I'm going to do. So from last week, we actually closed above that. So that means if it's not broke, why fix it, right? So there's still a reason for me to stay bullish in the market overall. But this week, we're going to have to wait for the confirmation, because like I'm not drawing any probability out of the table, like out of the window right now, because like for Bitcoin, having this correction from 126K all the way, okay, let's take 98K, how about that? But if you look at the percentage wise, it's only 21%, maybe, okay, give it 22%, how about that? So 22% correction. It's extremely normal for Bitcoin to do that in a bull run. So we are seeing some bullish sign and some bearish sign. If I have to call it, might as well just flip a coin. So however, on the hour side, weekly hour side, let me go ahead and remove this. So on the weekly hour side, what we're seeing here is that the bearish divergence we have been forming ever since March 2024. So this also gets to show that we're at the later stage of the bull run. So maybe perhaps November and December is really we're gonna head higher in these 2 months, and then perhaps 2026 is really gonna be the bear market. I don't know, but there's one like I'm just trying to throw around different scenarios so that you guys could adjust your portfolio based on these scenarios. Okay, this is on the weekly. Let's also hop onto the 2-week chart. So we're slowly building up that time frame here. So on the 2-week chart, one thing I don't like is that for the hour side, 2-week hour side, we're dipping below the hour side support. This is a bearish sign for Bitcoin. And since we are looking at the higher time frame, so now we are on 2-week chart, maybe this is aligned with the thesis I keep throwing around. So let me hop onto this thing I wrote weeks ago. So there are 3 groups of people, and I'm siding with the second group. Like maybe the all-time high going to be in this month or in December. If we don't see that properly, we are already in the bear market. If we don't see a new all-time high in December. So adjust your portfolio according to this. And if you believe that the macro tailwinds is enough to push up Bitcoin price. And as for on-chain, I would say it's kind of supporting my thesis, because what I see in the chart is that, okay, the bottoms is definitely near. We are reaching or approaching the death cross. So the 200-day is going above 50-day moving average. It's close enough. We haven't crossed that yet. So if we use this thesis and actually use on-chain to back that up, it's actually making a lot more sense to me right now. The first indicator we're looking at is the MVRV ratio momentum. So what this looks is how fast Bitcoin's market value is rising or falling compared to its real value, which is like the value based on the last time each coin moved. It helps us see whether the market is getting stronger or weaker. When the momentum is above zero, so above the green area, it means the market is heating up and investors are making more profit. When it goes below zero, so when we're at the red zone here, it means things are cooling down and prices may be losing strength. And what's happening right now, like recently, this metric turned negative because it's in red, right? So that matches the market since Bitcoin dropped sharply after hitting its all-time high of 126K. We know the gist. But here's the good part. When we compare today's momentum to the past two local bottoms in this cycle, it looks awfully similar because we actually experienced that the local bottom after 2024 as well. So each time the momentum hit this level before, Bitcoin later bounced back and reached new highs. History, of course, doesn't repeat perfectly, but it often rhymes. So, like that rhyme might be telling us the market is getting close to another turning point. Okay, this is just one chart. Let's also hop on to the second on-chain ring, you guys, is a short-term holder supply in loss. So what this looks at is it tracks how much Bitcoin short-term holders. So how do you classify as short-term holder? That means people who bought in the last 155 days. That's how you classify as short-term holder. So they're currently holding at loss. And it tells us how much pain and stress recent buyers are feeling from this chart alone. So when the number goes up, it means short-term holders are underwater, usually during times of fear or market drops. When it goes down, it means they are back in profit, so often signaling relief rallies or the start of a stronger market. And what's happening right now, the short-term supply in loss has climbed higher than the first local bottom of this cycle, and it's getting very close to the second one. So this is the first one and this is the second one. But here's the twist. Like the supply, the total short-term supply, which is the brown area here, is still increasing even when more of them are sitting at a loss. So like we see this like red zone and the brown zone. Usually because when the red zone is rising, the brown zone wouldn't be rising as well. So in the past cycle, the supply usually stopped growing or started falling when losses peaked, meaning fewer people were buying. But this time is different because people are still buying even as they are down. That can be seen as bullish sign. It shows confidence and accumulation. But if the market falls to around 98K, and triggers panic selling, the drop could be sharper because more short-term coins are now in weak hands. This is a setup worth watching very closely. It's like a tug of war between conviction and capitulation. All right, let's also hop on to the third indicator that I want to bring to you guys. So it's a Bitcoin cycle extreme oscillators. So it essentially combines 8 key Bitcoin metrics, including MVRV, short-term MVRV, SOPR, etc. And it works like a master warning system that shows when the market is too hot or too cold. When 4 out of these 8 metrics flash hot, it shows us a little bit warm, so warm signal, warm zone, meaning the market might be entering an overheated stage. When 6 out of 8 flash hot, it means we are really overheated, maybe near the cycle top. So the opposite happens in bear market. So cool or oversold signals appear when the same number of metrics show extreme fear or undervaluation. And what's happening right now is the chart, like this chart is one reason to support that the bear market hasn't started yet. The last warm trigger happened back in March 2024. So let me zoom because it's right here. So the one last happened that was back in March 2024, which lined up with Bitcoin's fast local top, just like what we saw back in the 2017 bull run. Since then, even though Bitcoin had two more local peaks, neither of them reached the warm or overheated area. So that actually tells us the market hasn't entered a full-blown euphoria stage yet. So what the data have been showing us, like all these on-chain metrics, okay, there are signs of a bottom are slowly building. Bitcoin tends to form bottoms over time as coins move from weak hands to strong hands and the overall cost basis rises. However, funding rates are still high, showing too much leverage, and realized profits are near cycle highs, meaning short-term drops are still very possible. And this works really well with the TA because TA is suggesting that we haven't reached the death cross yet. So perhaps in the coming days, we're going to drop a little bit more. But if we do, it's actually near the bottom. So it's a little bit contradicting, but patience is really key here. As the government moves to a reopening and we have a lot of like macro conditions shift, sudden moves can happen really fast, but long-term investors should stay calm and focus. All right, so that's a lot of data, a lot of number, and a lot of charts looking. Let's take a little break here because after that, we're going to look at the news analysis. We're going to look at Shutdown. We're going to do some macro analysis as well. So I'm going to see you guys after our little break.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
Alright guys, welcome back. As I promised you before we hit on that little break, we're now gonna take a look at the US shutdown and its perhaps like the potential impact on the Bitcoin's price and maybe the economy as a whole. Because as we know, like after 43 days is the longest US government shutdown in history. We have officially come to an end yesterday because Donald Trump signed a bill into a law. The shutdown actually started on 1st of October over some disagreement about government spending, especially whether to extend their Affordable Care Act subsidies. it froze services for millions of Americans, so it caused flight delays and it halted like food assistance, so the SNAP program, and it cost the economy at least $10 billion per week, actually per week, so $10 to $15 billion per week. The Senate and the House finally passed the funding bill earlier this week, and Donald Trump signed it late on Wednesday night, calling Democrats' demands extortion. So federal workers are now slowly returning to work, and the US government officially reopens today, so 13th of November. Economists say the economy will bounce back, but not fully, because about like more than $10 billion in GDP is losing every single week. So that GDP is gone forever. That means lost productivity, cancelled contracts, and delays that can't be recovered. Short-term wise, government spending will actually restart immediately, because if we hop to the TGA account, that's the Treasury General account, we know the government has just been collecting tax money without spending it. So after this, like coming to an end, government can start spending money again, and over 1 million workers will receive payback this week, injecting hundreds of billions in liquidity. Medium-wise, like growth will recover by maybe 2026 Q1, though confidence and morale are still really weak. But good thing, hey, because like ever since the shutdown, the TGA account has been going up tremendously, and we hit like $1 trillion. So it's good that knowing in the coming days, in the coming weeks, there'll be an influx of liquidity, and that will of course help stabilize the market and maybe perhaps help lift the stock price and also the crypto price as well. So, due to this shutdown, actually, a lot of people are blaming Donald Trump and also the Republican. Like, close to 40% of American people blame Republican rather than they would blame Democrats. And half of American people think that US economy under Donald Trump is not working for them. So 50% think is, well, it's not doing well. They have a lot of complaints. And Donald Trump's approval rate dropped below 50%. And this could really hurt the Republican Party in 2026 midterm election, especially if another funding fight happens in January 2026. Because what happened right now is just essentially they are kicking the can down the road. They are delaying the decision till January 2026. If they shut down again, the public's not going to like it, and it's not going to be beneficial for Republican in 2026. And this kind of align with the midterm bear market thesis that we have. Because during midterm, there's a lot of uncertainty. Usually the party that is in the House, like in the seat right now, like this year being Republican, usually during midterm, they will get like so much complaint because it's been 2 years and people actually get to experience the administration, and usually the complaint and the negativity piles up, and that creates volatility, and that also align with the 2026 Bitcoin halving cycle being a bear market as well. But let's actually come back to the shutdown, because we know it's coming to an end. This is actually a really good time for Bitcoin. This is a macro tailwind because, well, even the government was shut down since 1st of October, Bitcoin still managed to stay above 100K. Well, most of the time, maybe we have like a sharp correction, but like, let's not count that, shall we? So Bitcoin managed to stay above 100K. That is actually showing a lot of strength. And analysts expect there might be a short-term rally because like government going to start spending again, like all these billions of dollars will be entering the market and paychecks will be going back to the federal workers. So at least we know, like, when people got the money, they can start spending perhaps on food, like all the essentials. But there's always a small chunk of money will flow back to risk on asset, maybe Bitcoin as well. So this is what the TradFi analysts are expecting. And TradFi, they are being so optimistic because they are saying, okay, Bitcoin will reach at least like 130K to 150K this year. So if confidence returns. So it's really funny when I talk to TradFi people, they don't have such the mentality of 2026 being a bear market because us, we are native crypto folks. So we believe in the 4-year cycle so much that, okay, maybe it's turning into a self-fulfilling prophecy, but we don't know that yet. But it's very funny because when I talk to TradFi people, they were like, wait, so crypto folks actually believe in that? But there's so much liquidity coming in, like global liquidities are knocking. Why do you guys think 2026 is the bear market? Well, I don't know, but the data and the charts don't lie to me, so I'm sticking with that. But what we know is that since we're getting out of the shutdown, perhaps maybe we're going to get a bunch of ETFs being approved. We know Solana ETFs have already been approved, but what about other altcoins? I don't know, XRP or Dogecoin, even though I'm not like a huge fan of XRP. I really don't see the point of XRP being around, but like at the end of the day, we have a really pro-crypto administration in the house with Paul Atkins in the house. So getting approval for XRP and Dogecoin, well, might be is plausible. But like what this shutdown, so this 2025 shutdown, what it shows is how fiscal gridlock and liquidity crunches can ripple across markets from federal workers to Bitcoin. As the government resumes spending, liquidity returns, risk appetite will slowly rise, and Bitcoin could benefit just like it did in past recovery phases. But the next funding deadline we know is January 2026, means the political and market drama actually is not over yet. But like the shutdown also, what it stops is the inflation data. Because like one agency that was hugely impacted by this is the BLS, being the Bureau of Labor Statistics, because they basically stopped collecting data for inflation or the job market. So during the shutdown, many government surveys stopped. This include like the CPI report and employment saturation reports for October. They were completely they were like wiped off, so they weren't completed. Meaning the US will likely skip 1 month of inflation data as well as the labor data entirely. So the CPI report originally set for 13th of November, most likely is not going to be published. And so as the job report. So job report is also expected to be skipped as too much data was missed during the suspension. There are, of course, private groups like the ADP or Chicago Fed try to fill that gap, but most economists still call it a data blackout. So the next CPI release will likely come in December instead of November this time. And before the shutdown, if we look at the inflation data here, we have the year over year. Inflation is sitting at 3%, is of course above the Fed's target of 2%. Core CPI, so core CPI meaning without food and energy because those usually more volatile. So we look at core CPI quite a lot as well. So core CPI is sitting at 3%, is high, and energy cost is rising. We covered that in yesterday's show as well because one of the reasons we have a higher energy cost is due to AI actually, because we know tech giants, they are building all these AI data centers. And for AI, they consume energy like crazy. They're craving for energy, and because they're using so much energy, it's kind of driving the average energy cost for average American household as well. So this is the problem that we are seeing in the United States. So as food, so food is rising. So it rose like 0.25%. Economists estimate that inflation in October and November stayed maybe near 3%, basically where we are, with little movement. So the shutdown may have slowed price growth temporarily since government's spending paused, but without full data, no one can say for sure. So one thing we could look is actually trueflation. So trueflation is sitting at 2.24%, a little bit higher. We have been trending up since April, actually. So I'm not surprised because when I talk to American people, I know the inflation is quite crazy. And as for the energy cost, looks like it's just going to keep rising because like all these AI giants are consuming so much energy. And yesterday's show, I was comparing the energy cost in the United States with China. And China, right now, in this day and age, it looks like it has all the major cars. So China has rare earths. And we know US is really good at making AI chips, but even the AI chips requires rare earth as well. So they're gonna need to import from China. So China has extremely low energy costs. They have their rare earth. So that's why we are seeing China is moving at such a fast pace and being so advanced in AI. Of course, we covered Kimi K2 thinking just a few days ago. And it was like really impressive. It's one of the best AI model I've ever used. But anyways, okay, let's come back to the shutdown and overall the macro. So not only inflation has been kind of ticking up, because I don't really trust the CPI report. I much rather look at trueflation. But what we know is that inflation has been ticking up since April at let's call it 1.5%. And if we also hop on to the employment, so the labor market, right now we're looking at non-farm payrolls and what it means. Like, of course, this month we're gonna skip that as well because data hasn't been collected. But how do you read this chart, like this graph? Basically, we are looking at how many jobs are being added on a monthly basis, and in August, we only added 22,000 jobs. So I'll give you guys some context. Usually when there are less than 100,000 jobs being added on that month, it's classified as a weak month. So it's not good for the economy. So 100,000 jobs is the magical number we're looking here. And the thing is, basically ever since April, so April we did okay at 158,000 jobs being added. But ever since that, we have been adding jobs on a monthly basis, like less than 100,000. And because we don't have the data, people are saying, okay, August is 22,000 jobs being added. For September, we have the private data. Maybe there's like actually a negative 9,000 jobs, so 9,000 jobs less in the market, and there's a weaker hiring in late October as well. But again, this is like private data, the 9,000 jobs, so we don't know for sure. It's not the official number. Unemployment is also ticking up right now, sitting at 4.3%, and estimated in October is going to be 4.4%. Those suspended workers are slowly returning, but economists warn that the low hire, more fire trend could continue into early 2026, which align with the 4-year cycle, like 4-year Bitcoin halving cycle and the midterm bear market narrative as well. So because of this, another question I am thinking, and I'm really curious what Jerome Powell is going to do, is the rate cut. Because right now on poly market, there are let's see. Okay, 59% of people predict that we're going to get a 25 basis point cut. If we get a rate cut, of course, that's really good for the market. It's good for the sentiment. But there are 39% of people who think that the rate's going to remain unchanged, because for the past FOMC meeting, Jerome Powell was kind of like create some confusion to the market. There are dovish sign or the some dovish signs he threw around, so both bearish thing and bullish things. So in October, we end up getting a 25 basis point cut, but he also said that there's no guarantee we're going to get a rate cut in December. And after that FOMC meeting, the market, of course, didn't like that. So the next one is going to be in on 10th of December. We'll have the result whether he's going to cut the rate or not. But like right now, majority of people, so 60%, 59%, okay, 59% of people still think we're going to get maybe a small rate cut. Not for sure, but usually poly market is spot on with this kind of stuff. So as we move on to the later date, closer to 10th of December, the data will usually be more accurate. But right now, what we know about the shutdown is that the federal workers are slowly returning. They're actually being recalled immediately. So they are being guaranteed to have full payback because it's under the 2019 Fair Treatment Act. The workers will return today, so 13th of November, payback expected within weeks. The new bill prevents layoffs through 2026, but the moral is very low and operations are ramping up fast, so especially in BLS, Treasury, and commerce. So while the economy maybe avoided a disaster, the damage is very real. We have a lost productivity, delayed paychecks, and confidence is not very high, especially with Donald Trump these days. So data collection we know is going to resume and spending restart. We will finally get a clearer picture by late November to December. Until then, markets, including Bitcoin, are trading mostly on sentiment and liquidity rather than fundamentals. All right, so that's for the macro. Let's also hop on to a news that I saw. I find it quite interesting. So this actually happened last month. So Dubai court ordered a worldwide freeze on $456 million connected to Justin Sun. Justin Sun is, of course, the founder of Tron and the advisor of Huobi, or HTX, if you guys want to call that. This means that Justin Sun and his companies cannot move or use that money. So $456 million being frozen until the court finishes its investigation. The court said that was strong proof of a breach of trust, meaning someone used money in a way they weren't allowed to do. The money is tied to a stablecoin called TrueUSD. So TUSD right here. This stablecoin is, of course, supposed to be pegged to the US dollar at a one-to-one basis. It's managed by a Hong Kong company called Tecterex. Well, if I'm pronouncing it right, Tecterex. So in 2022, Tecterex had money problems. Justin Sun helped bail them out, so gave them hundreds of millions of dollars, and in return, he gained the control over TUSD operations. Now, a lawsuit claims that some of the TUSD reserve money, which should have been kept safe to back the coin, was used for risky investments or moved around improperly. This is why the Dubai government, or actually Dubai Digital Economy Court, froze this $456 million to protect the remaining funds until they can see what really happened. So let's give you guys some context and the whole timeline. So TUSD, the stablecoins, was of course like launched at to basically a competitor to USDT, to Tether. And then a Hong Kong firm, so Tectorest, took over TUSD when the old company Arc Block ran out of money. And then Justin Sun, he scooped in, he secretly helped fund this takeover, giving him control of TUSD. And then back in 2023, like TUSD lost its peg several times actually. So audits show some of its reserve were not real cash, but loans and investment related to Justin Sun's company. And this year, someone sued TerraRex for breaking trust and misusing funds. And that's when the Dubai court comes in. This is actually the first time a Dubai court froze crypto funds globally. So it's really a historic move, I would say. But as for the impact, like if you are just like a normal user of TUSD, of course, right now is pegged to $1, so it's fine. But like, I do believe because of these kind of incidents, these kind of news, this would ultimately benefit Tether and Circle instead. And as for Justin Sun, I am sure he is very used to cases like this. Like he isn't officially charged in this case, but it's another legal problem added to many others. He says the bailout was legal and meant to protect the ecosystem, but critics believe he was using TUSD to grow his own empire at the Tron network. Because Justin Sun, he hasn't been the favorite person in crypto from all these years. He's actually one of the most controversial people in crypto, in the crypto space. Well, of course, like if you guys didn't know, if you just joining crypto, he created Tron to TRX back in 2017, and they actually sold a large amount of TRX after launch. So people are saying that he is an expert of insider trading. And the SEC was saying that he was faking trading volume, so aka wash trading, and he promoted his coins illegally. He actually fled China under investigation. And then because of that incident, he took over TUSD through the bailout. He donated like millions of dollars to Donald Trump-linked crypto funds. So critics are saying that maybe because he donated so much money to Donald Trump, his case for the SEC kind of got delayed. But like ultimately, Justin Sun is one of the most hated people in the crypto space. People really don't like it, yet he managed to get away with a lot of charges and stuff. Like if you compare Justin Sun with other founders, SBF, for example, from FTX, and CC from Binance, they've all gone to jail. Okay, CC maybe stay in for 4 months or less, but like at least both of these founders went to jail. But Justin Sun somehow is getting away so freely and traveling around the world. One of the reasons is because he is an official diplomat for Grenada, so kind of gives him some protection. And people are really frustrated by this because he keeps escaping. Like even with multiple fraud cases and in like some warrant, he hasn't been arrested. And there's a phrases in crypto say everything Justin Sun touch will essentially go to zero. So on Twitter, everyone's calling him a scammer, the Chinese SBF, etc. So yeah, I mean, watching this news is, I don't know, I find it quite entertaining. So this amount of money is being frozen. None of the funds can be moved. TRX dropped a little after this news, but knowing Justin Sun is actually one of the best marketers among the whole world. So I'm not too worried about TRX. Like, he's going to find his way to pump the TRX token. Maybe instead of like sticking a banana to the wall and eating the banana, I don't know, perhaps an apple. How about that? So this event, what I saw is that, okay, is a shake confidence in TrueUSD, so this stablecoin, and is adding some pressure to Justin Sun's ongoing SEC and UK case. But let's see how it goes, because he donated so much money to the right political party. So I don't know. This is just how the world works, I guess. All right, let's move on to the last piece of news we are looking at. So here we actually talk about the seized 127,000 BTC. We talked about this like, I think 2 weeks ago on Roxham TV. I can't remember exactly. It's been some time ago. So what happened back in October this year is that the US government quietly seized 127,000 BTC worth over like $13 billion at the time from a Cambodian-Chinese guy. And this Cambodian-Chinese guy, his name is Chen Zhi, and he is a master criminal. He was running some illegal scheme and human trafficking in Cambodia, and launder money through Asia. So this case, like, this is one of the largest Bitcoin seizures in US history, even bigger than the Silk Road and Bitfinex hack recovery. So the case became international news like after China. Right now, China is accusing the US of stealing foreign assets under the name of justice, claiming that some of that seized Bitcoin might have Chinese ownership ties. So who was in fault in this type of case? So the main person is again Chen Zhi. I think we still haven't arrested him yet, and I seriously, I don't know why. But like, according to reports, like US investigators linked the Bitcoin from him to cross-border money laundering through gambling websites, use of OTC crypto desk in Hong Kong, Singapore, Cambodia, and the movement of funds through USDT and Bitcoin mixers. The Bitcoin that the US government stole from him, like, it was stored in cold wallets, so it's completely offline, which the FBI and the DOJ managed to access after months of tracking the wallet movements through blockchain analytics. So right now, if we look at how much the US government holds, they're holding more than 326,000 BTC on the balance sheet. So that's sweet, right? But one concern that I'm seeing public have is that how the hell did the US manage to seize that amount of Bitcoin? Like, secretly doing all this like shady stuff. I don't know how to frame it, but like secretly stealing 127,000 BTC from a Cambodian-Chinese guy. All right, so the US government actually didn't hack Bitcoin or guess a secret seed phrase just by luck. Instead, they gained access because the wallet involved had a serious security flaw known as the milk set vulnerability. This was not a problem with Bitcoin itself. It was a problem with how some wallets were made. So the mistake here is that there's this mining pool called Lubian, and some other wallets used a weak random number generator, basically a bad way to create private keys because it's not truly random. It creates numbers in a predictable pattern, like a dice that rolls the same sequence every time. Because of this, instead of having an almost impossible number of possibility, like possible keys, the number of possible private keys became much smaller and easier to guess. Like, this mistake turned those wallets in what experts call the weak key wallets. And like once security researchers and later hackers figure out the pattern, they realized they could recreate those weak keys by testing like all possible weak keys against the Bitcoin blockchain. They eventually find wallets that actually contained the money. So that's how the US government stole 127,000 BTC from Chengzhi. So China right now is accusing the US, is criticizing the US. It was an abuse of jurisdiction, arguing the assets were tied to crimes that occur outside US territory and involved in Asian countries and involved Asian citizens. I mean, I don't think that statement is crazy because Chengzhi is, we have like human trafficking news like this is actually really, really infamously known in Asia. They would like take a hold of people and send to some Cambodian farm to scam people. And this is a really infamous scam in Asian areas or Asian countries. So most of the victims are Asian. Most of the victims are Chinese. And I know like this guy has been scamming people from all around the world. But like most of this 127,000 BTC doesn't belong to American. Like, of course, there are a chunk of American citizens got scammed by this, but American people aren't the majority of the victim here, but it's Asian victims, like in Asian countries instead. And yet, US is stealing all these BTC. So China claimed the US was using these like seizures to secretly build a Bitcoin reserve under the guise of law enforcement. They also accused the US of hypocrisy, so criticizing crypto use while quietly accumulating Bitcoin through seizures. So far, US officials have not denied holding the seized BTC, but they insist it will eventually be auctioned, as they have done in previous cases. So this is kind of raising the moral question. So, like, about fairness and being legal. Like, if the crimes majority happen in Asia, does the US get to keep the have the right to the seized assets? And we do really need some transparency here. Like, shouldn't there be a public record of what happens to the BTC? So China's state media went even further, calling it a economic colonization through crypto seizures. Meanwhile, American officials argue that all BTC seize is linked to criminal activity, so therefore legally justified under global anti-money laundering laws. So, yeah, I mean, let me know if this is a controversial topic because we know it's not just the US, but like all these countries around the world could just like grab victims' money and slowly build up their reserve. Is it morally right to do it instead of like paying back the victims? I don't know. Because the victims, they can actually go online to fill in some form and maybe have the money back. But the process is really dismissive and it's very long. So that's why, yeah, US get to keep the assets, get to keep the seized Bitcoin, so as other countries. So anyways, these are the interesting stories that I have seen. Yeah, let me know if you think this is morally correct. Let's have a discussion and see what people think about these seized Bitcoin. Do they should they auction away or give it back to victim? I don't know. But like that's pretty much all I want to cover in today's show. So just a last call to action. Make sure to follow us on Twitter. So my personal Twitter is jamjamcrypto_IO. Make sure to follow Roxum TV as well because we have regular updates. We have regular news. We are updating like every half an hour, not only about Bitcoin, but like here we have like Apple, so some AI stuff or global news, geopolitics. So there's a lot of content. Point being, you don't want to miss that out. Again, so my show is from Monday to Friday, 4 a.m. Eastern Time this week. But next week, we are moving to 3 a.m. Eastern Time. So if you guys not managed to watch this live, the replay is also available on both my own YouTube channel, so Jam Crypto, and also Roxham TV YouTube channel. So be sure to check that out. Anyways, I hope you guys are having a fantastic day, and I'll see you guys in tomorrow's show.